Recorded live right here in Little Rock, Arkansas. It's time again for Larry's Rants, Raves, and Reviews. And now, here's Larry.
Hey, everybody, we're going to talk mortgages on this episode. Now, you may say, Larry, that sounds like a weird or kind of a boring topic, but the guy sitting across the table from us today, that's not a rant. I don't know if it's a review or anything, but we're going to talk about it. But the guy sitting across from me would beg to differ. It's anything but boring or weird. So keep listening to this, because here's what I'm going to tell you. I think on this episode, you're going to learn something that will help you, your kids, your grandkids, or your friends. Our guest on this episode is Shane Lester of Wonder State Mortgage. He brings 26 years of expertise to this microphone today, and 23 of those years with his own company, Wonder State Mortgage. Shane, welcome to the show. It's our privilege to have you, buddy.
Oh,
it really
man,
is.
Thank you so much for letting me be here. This is going to be great.
You know, I got to thinking, Shane, you and I have known one another now for about 15 to 20 years.
Right at that. Yeah, absolutely.
Yeah. So it's really great to have you here. And I really want to get into the show because I don't want to waste any time. I want people to hear your expertise. Let's talk about the ins and outs of mortgages and this type of thing, because I've got to say that besides choosing which house that you want to buy, I would have to think choosing which mortgage company or mortgage you choose has to be one of the biggest choices that you make in life. Absolutely. Am I wrong or right?
No, absolutely. A lot of times people will treat it as if it's like a commodity or something, but it's actually each mortgage needs to be specifically designed to help you meet your financial goals, your long-term plans, and they're all not the same. I mean, I had a guy call me the other day and say, hey, look, so-and-so had this rate and I got this rate. Why are they different? Well, he did an FHA loan. You did a conventional loan.
Okay.
And so it's night and day difference. You want to know the difference between that? So we went through it, and he goes, no, I don't want to do that loan. Exactly. It doesn't mean one loan was better than the other. It's just that loan was perfect for him compared to his other one. He goes, I'll stay right where I'm at.
Okay.
So everything's going to be a little bit different. It's very important to get pre-approved on this stuff, so you know what you're looking to do. You know exactly what your options are. And that's one of the things that we've prided ourselves on, is just giving options. And especially people that's had mortgages 2 or 3 different times, they'll be like, man, I've never seen this before. Nobody's ever showed me I could get 5% for $73,000 more in points.
Okay.
On a $1.5 million house. Mm-hmm. They go, I want the lowest rate. Well, maybe you don't if you realize how much it's going to cost you to get it.
Okay. Yeah.
So where's the kind of break-even point? Is it 2 or 3 year break-even point to go from 6.375 to 6.25?
Boy, he's already hitting on all cylinders, because I've got no. I've got questions, and I'm already checking them off, going, well, he's going there. Yeah. So we're finding out that all mortgages are not the same, and as far as pre-qualification, I'm glad you brought that up, because it was one of the things top on my list. If I remember correct, you're certified with Dave Ramsey and teaching a lot in your church and things like that. Is that correct?
It is. We've, you get to teach about money because you've made all the great moves with money that you can imagine, right? So we've taken that experience, and, in 2008, I got asked a question: what would you do if you didn't owe anybody any money? Mm-hmm. And that never crossed my little mind. I thought, well, that's a very good point. Mm-hmm. How much can I give? How much can I change the world around me if I don't owe anybody any money? Not how much is the payment, but how much is it?
Okay.
And so my wife and I have hosted 22 courses over at our church. About 700 people have come through that.
Okay. Cool.
And some of the stories we get, and, even in the company, I will give away the Total Money Makeover, anywhere from 200 to 300 of those books a year, to potential clients, to some clients that just want to read about something. And, I get a message December 28th a few years ago and says, hey, man, thanks for getting us a good mortgage in 2015. I actually read the book. I don't my wife and I just paid off our student loans.
Cool.
And, this young couple, he said it sat there for 4 years.
Oh my.
And he said, one day I just decided, hey, I'm going to open this and see what's going on with it.
Yeah.
And so I don't know what's going on in y'all's world, but that matters more to me than anything.
Oh, absolutely.
And now they got 2 beautiful kids. They just both got a promotion, moved to Northwest Arkansas, buying a house they never dreamed they would ever buy.
Mm-hmm.
And an income level that you're just like, oh my gosh, in their 20s making this kind of money is just fantastic. Yeah. So,
well, I would say that you help to shape or change the destiny of their life by giving them that gift, even though it took 4 or 5 years for it to be on the shelf. At least he dusted it off and he's doing right, correct?
We're all planting some kind of seed,
hey,
right?
There you go.
What kind of seeds are we planting?
So when you pre-qualify for a loan, they basically look at your income and, your net worth, different things like this, and say, okay, here's how much you could afford to spend on a home. Are you in a position to where you could maybe do a little more for people and say, yeah, you know what? Looking at all of your finances, here's what you could qualify for. But at this stage in life, could you throttle back and only live in this home as your first starter home or something? Or is that part of your expertise?
We've got story after story of that where the realtor calls and says, I've never seen a loan officer tell somebody they should pay cash for a house. Mm-hmm. Don't you get paid for doing mortgages? I said, I do, but their best situation was pay cash for that house.
Right.
Right?
I love it.
Hey, I got to put 20% down. No, you don't. Well, I have PMI. Well, let's look how much that PMI is. Mm-hmm. Right? Do you want to put 15% down and pay $26 more a month for PMI and keep that extra $20,000 to do some things when you move in your house?
Mm-hmm.
Huh.
Yeah.
Or do you want to pay that extra $20,000 down and save $120 a month? So you use all that money and you put it down, and then all of a sudden you go fill up a credit card, or you go take money someplace else, and all of a sudden you're like paying a lot more interest for this, and you're like, why didn't I know that up front? Or a lady called the other day and she put $115,000 down on her house. She's not allowed to take cash out of that for a year. Mm-hmm. She has to have a mortgage for a year. So she is tied down to that bank note. A bank put them in this. I'm not anti-bank. My money's in a bank just like yours is. I just like to use the specialists of everywhere. I like to go to an insurance rep to get insurance, a CPA to get advice, a financial advisor to get that. I just don't go to the bank normally to get that.
So that rule was a clause that was in that particular mortgage?
No, it's just Fannie and Freddie out there. They won't let you. Yes, that's governed by them.
Okay.
Absolutely.
So there are pitfalls, or what I used to use this phrase a lot, gotchas.
Gotchas.
Okay.
Well,
there's
just remember,
gotchas in there.
Yeah, ChatGPT. I mean, we're getting a lot of this.
Mm-hmm.
It's great giving you information, but it's horrible with strategy, empathy, financial goal setting. Mm-hmm. You're going to be here 5 years, you're going to be here in 10 years.
Yeah.
Well, Shane, if I do this over 30 years, how long have you been in your last house? 3 years. What about the house before that? 4. So we're talking about 30 years.
Yeah.
Right? You're 28 years old.
Okay.
We're not going to be here 30 years more than likely. Mm-hmm. So let's make sure we spend our money the way you want to now, and not under compulsion, or you have to say, I got to put this down because whatever. And once you get that payment, it's really interesting to see that $60 per $10,000 is what it changes your payment. So you get you a payment, $2,200 a month. If you put another $10,000 down, you save $60. Right?
Okay.
If you put $10,000 less down, it costs you $6 more a month. Now, it may be $59 or $62, but $60 is a good little rule of thumb.
Right.
Because I've had them call and say, hey, what's the difference between $194, $195, $196, and $197? I go, $6, $6. And so that way it gives them a good rule of thumb, and they're sitting there arguing over $2,800 on closing costs, that they want them to pay. I'm like, you're fighting over $15.
Yeah.
Oh, really? Yeah.
Okay.
So again, that's where it comes into play a lot on just different options. Everybody, they don't know they have options. And I tell them when they call me, it's this way: income, assets, documentation, and liabilities. That is it. And the hardest thing we have to do is take somebody's life like ours and fit it into these underwriting guidelines.
Oh.
Because you're not walking around keeping documents. Hey, what does Fannie Mae say I need on this? What does VA say I need on this? You don't live that way. So we have to try to fit everything in there. You know, I got a situation going on right now where they have their personal tax returns going to the business, W-2s going to the business, the husband's business is coming to her business, and the underwriters just had a fit, you know, but there was easy explanation for all of this.
That sounds like mine.
Yes. And I mean, I understand why they did it. They want all their stuff to come in someplace where they can get it, and it's not going to be sitting out in their mailbox.
Yeah.
You know, so every situation is different. I cannot express that enough. And what fits your need may not fit the next person that walks in here.
I would have to think that shopping for a mortgage I would kind of liken to becoming a parent. It's the hardest job in the world that you get zero training for. And I would think just going in to get a mortgage, people just walk in and say, hey, what can I have? And then they just accept it and walk out.
They do sometimes, but you know, that's what we don't want. We don't want to just walk in and just accept it. We want them to walk out there knowing that they have options. Walk out of there confident that, hey, this is how much I want to spend. This is what I'm going to do. You know, but it's not just what's your rate.
Mm-hmm.
What's your rate?
Mm-hmm.
What's your rate?
Most people say, what's my payment?
Yes.
That's all they want to know. What's my payment? What's my payment? You know, listen, now you're going out 30 years. We can go 40 and make it lower and go 50, you know. It's coming out with the longer ones. But they don't realize the trap that they're getting into when they do that is a trap. Because you're paying for that thing 3, 4, 5, now 6 times. How many times you won't pay for that? And then they go and pull out a second to pay off their credit card. So now you're paying all your clothes and everything for 30 years.
Or more.
Yeah.
Or more. And, you know, you got interest calculating daily on that home equity line of credit. You next thing you know, you pay all this off. And that's what's going on in the refinance world right now. A lot of people are still on the 2% and 3% mortgages, 3.5% mortgages.
Wish I had one.
We're seeing these companies. I don't want to say any names. I don't want to get in trouble.
Right.
But they're contacting these clients, and they're seeing that they have all this debt, and they're getting them to get this equity out, and they've put this unsecured debt on a secured piece of property here that now this is them. And then what do most of the time? They turn around and charge it right back up. You know, and it's a Big Dave thing, right? It doesn't change your behavior, so you get right back in that trap. And you know, you got a single mother that comes in and she filed bankruptcy 2 years ago because the car payment, she couldn't afford it. What's the largest thing on her credit report right now? Another large car payment. And it breaks your heart to see that. And again, there's no preaching and stuff like that we're doing. We're teaching them.
Yeah.
We're teaching them. We're walking them. Right. And again, with my background and what I've done with money, you know, I can break that wall down very quickly if you come in embarrassed or not really knowing what you're doing. Because again, that's my job, to walk them through it. And if you look at our reviews, you'll see, you know, so-and-so told me to come back a year from now. So-and-so told me that I couldn't do anything. Well, you call them back here in 3 weeks and tell them you just closed on your first house, right? And so I truly believe if there's a way to get a mortgage done the right way, we're going to find it.
I believe that.
And if I tell you, if you can't get it, you can't get it unless somebody's going to give you some little temporary bank loan because you know somebody down at the bank or your dad knows somebody down at the bank. But as far as the guidelines go, I love the guidelines. The guidelines give us the guardrails and tell us exactly what we can do. And listen, ask these underwriters, man. I push them to the T on that because here's what it says. We can do that. This client qualifies. Here's how you calculate the income, right? And so we walk them through that. And when you're teaching underwriters sometimes, it's crazy. Am I perfect? No. You know what? But I tell you what, I'll dig into those guidelines real quick and make sure that you know what the answer is and you know with confidence that we're going to close. Because we don't give pre-approval letters for people that don't qualify. Now, if they quit 2 weeks into the process, not my fault. Right?
Right.
We can't require them to give us their tax returns to qualify if they're self-employed. We just let them know based off of what you've given me, you're pre-approved. Seen your credit, you're pre-approved. But when you give me that tax return and you go, hey, listen, I'm the one that makes all the money here. I only own 50% of the company, so I should be able to count all 100% of the income. I'm not laughing at them, but you go, no, it doesn't work that way.
Right.
Right? You only get your 50%.
Yeah.
Well, I earn all the money. Well, good. You gave that 50% to your spouse.
Yeah.
And if he's going to be on the loan, then we can use that income.
Well, it's kind of like years ago, I was talking to my CPA and he was telling me, Larry, you're taking too much money. I said, I own this thing. He goes, but there's guidelines. So he had to throttle me in. And one of the things that I would say to our listeners is, everybody has their lane of expertise. Even us three sitting at this table, Randy has an expertise of building a home, and he'll build you a phenomenal home. And I mean, he does some things that other builders don't do that enhances the quality of the home. If I was going to have a home that needed to be built, Randy would be the only person I would go talk to, okay? If I were going to build a home and needed financing, I'm going to come to you because you are the expert in that field. So people need to tear down their walls, get rid of the embarrassment, get rid of the shyness, and come in and talk to you about things. I, on the other hand, I know how to fry chicken, and I know how to run a business or run a restaurant.
Right.
You guys don't. So if each of one of us can stay in our lane, and I think the point I'm trying to drive home to our listeners is find somebody with integrity that you can trust and go in and talk to them about your mortgage. And I would say after all the years that I've known Shane, Shane, I know you're a believer. I know that you truly care about people. I have seen you stand back and say, this is something that I would not do. Don't do this, or I wouldn't do it. And so you're not in it for the sale. You're in it to help the person. And so I'll give you that, feather in your cap, if you will.
There's 13,000 names in my phone.
Wow.
13,000 contacts.
Wow.
That's more than
Everybody. So in the past 3 weeks, I've closed a gentleman that he sent me my Bank of the Ozarks business card from 2002 before I opened my company.
Yeah.
This was his 6th mortgage with me. I've taken care of both of his kids, both sets of parents, 8 of his coworkers, and 8 of his coworkers' kids. Right? So that one relationship from 2002 has turned into 40 mortgages over the last 20 years.
Yeah.
And who else? How many others? So I had this dream one day. I don't have a big sign out there in at my company, right? And so I just have me and my reputation. And we protect that at all costs. We make sure when we give somebody something, they know they can count on it. And guess what? No surprises means no surprises.
Yeah.
So I had a lady tell me one time, hey, Shane, this was $27 more. I pulled out my checkbook and wrote her a check for $27 because I promised her no surprises. Oh, yeah, there's been a couple of $4,000 or $5,000 checks written too.
Yeah.
Right? My mistake, my rules. I own it. Move forward.
There you go.
I don't ghost you. Who are you?
Yeah.
And you hear about it all the time. And it infuriates me when you have loan officers representing our industry that are just there to make the money, just there to yell. Of course we need to make a living.
Yeah.
But you know what? You help enough people get what they need, you'll have way more than you will ever need. Right? It's really that simple.
You've read Zig Ziglar,
I
haven't you?
love Zig Ziglar.
Yeah.
Brother, let me tell you. I love him.
Oh,
Yes.
Zig, he was right.
And I
That's
got a fellow mortgage broker over in Texas who Zig Ziglar is his granddad-in-law.
Oh, really?
Oh, my.
And part of our little group, there's about 10 of us across the states, independent brokers brought together about 15, 18 years ago.
Okay.
And we just share best practices. We've skied together. We played Pebble Beach together.
That's
These
awesome.
lenders have brought us together, and we've all become really good friends. And he shared something with us one time that just changed my whole company by the communication I have with the listing agent, the buyer's agent, and just a constant communication flow. And it is just so much fun. And one of my biggest new sources of business are listing agents because they'll tell me, you communicate more with me than the buyers, that I send these loan officers. And I don't get this much communication from there. And it's not real hard. You just give them updates, appraisals in, homeowners insurance in, titles in, right? We're in underwriting. We're clear to close.
Yeah.
Docs are at the title company.
Yeah.
I tell them it's Wonder State Mortgage, not wonder where did my loan officer go. And that usually gets a little chuckle out of them.
I love that. I really do. Well, let me ask you this. What are some of the pitfalls or the gotchas? Is there anything you can pinpoint to that says, hey, this is a kind of a common gotcha that people fall into? Are there things like that? Or are they just so vast that you can't really name them?
Let's start off and talk about the credit reports. Credit reports have gotten to be about $137 a pop.
Okay.
Right?
Okay.
$137.
Okay.
Well, we've got a free credit report. We're not going to charge you to do an application. You go to closing, and there's a credit report charge for $277.
Ah.
So my little text message once they complete the application is, hey, look, yeah, I never dreamed it'd be $137. But that's what it is, and that's the cheapest way for me to get you the best rate, the best product to you. Otherwise, you're going to share in everybody else's because somebody has to pay that money. And so that's either going to be gobbled up in rate somewhere, another fee somewhere. And so the biggest thing on these gotchas is, hey, look, we're only charging this. Well, wait, I forgot to tell you about that. I forgot to tell you about that. And I don't care what they label it. The numbers are the numbers. You can say, oh, it's only 1 point for this. And then, oh, here's a $700 processing fee. Here's a $600 lock-in fee. Here's all this crap that you just go, come on now.
Yeah.
Let's look at the numbers. And one of my things that I really love is when they call and say, hey, Shane, so-and-so told me to call you. I've already been pre-approved at so-and-so. We've got an accepted offer. I go, great. Here's what I want you to do. Don't tell me anything that you have. I'm going to tell you what you qualify for, and then we can go from there. I don't want to sit there and go, oh, I can beat him by $2. No, here's what you qualify for. And then when we show you that, if it's not as good as what you got, then you stick where you're at.
Yeah.
Right? I'm a big boy. If they've got a better deal, go take care of it. But if I'm not having the better deal myself, I'm not in business very long. I don't care what I do. I don't want to sell something that, no matter who you are, somebody can get it $1 cheaper sometimes.
Sure.
Right? I mean, if you want to sit there and all day long, and then all of a sudden you can't get a hold of them, you can't get the appraisal on time, you miss closing dates. There's all kinds of things that go into this. There's a lot of moving parts, and you want them to be educated all the way through this, but you don't overwhelm them. You get an engineer there, they're going to want details. You got other people going, hey, when am I closing? Tell me what documents you need. Leave me alone. Right? Shoot me a text. Everybody is different. And so to keep an eye on the charges, PMI is a big thing. Okay, so
I've always looked at PMI being a bad thing. Is that right or wrong?
PMI.
Oh, you love it?
I love PMI. Let me tell you why.
Okay.
You ready?
All right.
You know how many people have 20% to put down on a house?
Probably very few these days.
Thank you. So PMI gives them an opportunity to get a house, start building equity, right?
Okay.
Now, just because I love it, I didn't say I want them to keep it forever. The moment you get 20% equity in there,
Drop it.
drop it. And that's one of the other pitfalls I've got down here that I want to talk about is don't just refinance to get rid of PMI unless there's a benefit there on the interest rate. Okay, so if all you got to do is contact the servicer who has your mortgage and says, hey, I have 20% equity in the property. They'll say, okay, you're going to have to pay $300 or $400 for an appraisal. They're going to make sure the property is worth that, and they're going to drop the PMI.
Okay.
On a conventional loan.
Okay.
All right. So why refinance, spend $3,000, $4,000, $5,000, $6,000 when you could spend $300? Let me tell you why.
That's what a lot of people don't realize. If their house increases in value, they think, oh, I've got to pay on this for the next 4 or 5 years or whatever to get it to come down. And they're trying to do this. Well, look at it next year. Your house may have gone up, appraisal may have gone up enough, 10%. So you got 10 you put down, then you got 10% it went up, you're out.
You're out real quick. Absolutely. And you don't have to refinance that. Now, obviously, if you can get both, you get to refinance to a lower rate, which, again, we've seen the rates just kind of flutter, for the last couple of years. And I don't expect that to change. I mean, not to get off on a tangent, but I don't. No, I mean, think about this. September 2024 was one of the lowest rates we've seen in the last couple of years. And then February 28th of this year, yes, the 28th, right before we started messing around with Iran, because I'm in Miami in a hotel room calling every veteran that I've done a loan for, let them know, hey, look, we got a great refinance. We got to get this today. I didn't know Iran was going to happen, or I didn't know it was going to happen, but we locked like 6 people in that day in the hotel room. My wife's like, hey, we're on vacation. I said, we'll get to vacation a little bit, baby. We got to take advantage of this because we didn't see them.
Yeah.
And then what happens? And the rates shot up and they haven't got back there yet. But we've had, 5 or 6 Fed interest rate cuts. Right? That's a short-term rate. You can see the chart. Cut, rates go up, mortgage. Cut, rates go up on the mortgage. Cut, rates go up on the mortgage. So if September 24 was the lowest we've seen them right now for a while, and they've had, 5, 6 rate cuts?
Yeah.
And we're still higher than that? What does everybody think? Oh, the Fed cut it, so I'm going to get a better deal. No, we locked in before the Fed cut it because the rate shot up.
Okay.
Does that make sense? Mm-hmm. Okay, so you just have to have somebody paying attention, Larry. It's just so important because if you don't, they don't know what to look for. All they're hearing is the news, the media, the rates are here, the rates are there, and then we sit there and show them. You come in front of my office. What is on my screen, I have a monitor turned facing you where you can see everything I'm looking at. So I don't get to pick and choose what I'm showing you. Here it is.
Well, what could cause that? I mean, the mortgages follows the 10-year rate, the 10-year T-bill.
Some of the number one things that's going to drive mortgage rates down is going to be high unemployment, high inflation, and quantitative easing, QE. Government buying bonds. Yeah. Those are going to be the number one things. You want to keep an eye on mortgage rates? Look at the 10-year bond, right? That's not the only one. That's just a quick little that you can look at. What is it, 4.3, 4.4 right now?
Right.
So if it goes down to 3.9, you're probably going to see mortgage rates get to the 6% or maybe in the 5.875 on conventional. But while we're talking about that, on the PMI, also remember, PMI on USDA loans is for the life of the loan, right?
Okay.
But it's not credit score based. It's a set PMI figure, just like on FHA. FHA is for the life of the loan, right? Unless you put like 10% down, then you can pay it for 11 years, right? I don't care if you get 20% equity there. You're going to pay it for 11 years or life of the loan or refinance out of it.
Okay.
They all have their place. So everybody comes in and says, I want to do an FHA loan. I'm a first-time home buyer. I got a 760 credit score. Well, we're not doing an FHA loan with 760. We're going to do a 3% down conventional. And then when we show them, you don't have the 1.75% funding fee while you're putting down 3.5%. You lose half of it to a government funding fee. And then you have PMI for the life. And they go, well, why would I do that? Exactly. Why would you do that? Well, I didn't know I could do conventional. I thought I had to put 20% down. Nope. You know what a first-time home buyer definition is? Not been on title for 3 years.
Okay.
Oh, wow. Really?
That's it.
Not been on the title of a house?
For 3 years.
Oh, okay.
So you can sell your house, go rent for 3 years, and then you come back, you qualify for first-time home buyer under current guidelines.
Well, I didn't know that.
Yeah, I didn't either.
And if
what if you own the rent house under an LLC?
Well, your name. Your name. And so maybe you got a wife or a spouse that they're a first-time home buyer, and the other spouse is not a first-time home buyer. As long as one of them's a first-time home buyer, we can get them through on the first-time home buyer. How about that?
Now, see, folks, I told you this was not going to be weird or a boring topic. This is anything but. This is educational stuff.
It is.
I got to tell you, I'm sitting over here. My head is kind of spinning, and but I've got to tell you this: if I had a mortgage or wanted to buy a home, Shane's the guy I'd go to. Yeah. I would sit and listen. This is the kind of guy I like to work with. I work with people that I trust and people that I like. And if I don't trust you, No way I'm going to deal with you.
Never.
And I have to like you. Quick story. Back when Joe Montana was coming to Kansas City to be the quarterback, okay? Taking you back a few years. I went to buy a big screen TV. Now, that is when big screen TVs, were when they were so big that it took 4 grown men to pick one up.
Those big Sonys.
Yeah, oh yeah. So I went to Circuit City.
Right.
And I looked at the TV. It had the most beautiful picture, but a horrible sound. I ran over to Best Buy and looked at it. It had a horrible picture, but a great sound. I looked at my wife and I said, I don't care because I'm going to buy a new Bose surround sound system and put on it. And she goes, okay, well, are we going to go back over there and buy it? And I said, no, not tonight. She looked at me and she knows me so well. She goes, you didn't like that guy, did you? I said, I can't stand that man.
Right.
I waited till the next morning thinking, okay, he was on the late shift. I'm going to go in. I found a salesman. I went and I stood around the store and I knew the guy that I had talked to that night, the night before, wasn't there. I went and found the young salesperson, talked to him a couple of minutes, and I said, you want to sell me a TV?
Yes.
Yeah. I said, you want to sell me a Bose surround sound system? Yeah. I deal with people that I like and people that I can trust.
Yeah.
I think, Shane, that you're the man for this, and I'm just going to put it out there. Let me ask you this. If somebody, because apparently your mortgage company, and I'm not talking about you, I'm talking about the people, our listeners, you've got a mortgage company that's probably not going to pick up the phone and say, hey, you hit your 20%, and you ought to come in and take a look at this and get rid of this PMI insurance. Am I correct on that? They're not going to pick up that phone and do that for them, right?
They're not. No. They're not going to check, make sure that they filed their homestead exemption for last year.
Okay.
Right? They're not going to check and say, hey, you can freeze your taxes.
All right.
If you're 65.
Okay.
Well, what are you talking about? I've never heard of that. Yeah, I don't care who they are. Financial advisors that refer clients to us is the first thing we look at. Do they have their homestead exemption? And if they're 65, have they frozen their taxes?
Okay.
I've got a dear friend that I shared that with, and they didn't. And it cost them about $5,000 with the reassessment of their property over 2.5, 3 years that they didn't do it as the property taxes went up. Now, they were able to freeze it. Sorry about that. They were able to freeze it. And after they went up, though. So it's kind of weird to watch this, and we follow up with every client every year to make sure anybody we took care of the year before did get their homestead exemption.
Okay.
Right? We monitor. We have all of our stuff monitoring. Hey, your PMI is going to come off here. But if they don't pay extra, and to be honest, you don't see them stay in the house that long. I mean, everybody's moving and shaking right now.
Right.
So, even on the lower rates, we're seeing that move a little bit. And while we're on that, Larry, please understand, the best time to buy a house is when it fits in your budget.
Okay.
Period. Right? Here's a fact. The same house next year is going to cost more money.
Yes. Okay.
Right? We don't have enough housing out there.
Right.
So you wait for the rates to come down. What happens if the rates come down? Who all gets in the market? Everybody.
Yeah, everybody.
Then what happens? You pay more for the house.
Bidding war start.
There we go.
Yeah.
Right. So you can enjoy that appreciation. I'm not telling you to jump out there and buy one right now. When it fits in your budget is the best time.
Is this a fair question? Let me ask you this.
Yes.
Is there kind of an average mortgage rate right now that you say you're going to pay about this?
Oh, 6.25%, 6.5%.
6 1/4.
On conventional. And government loans are going to be about 0.5 to 0.75% lower.
Okay.
Because they have funding fee, because they have PMI for the life of the loan.
Okay.
Right? Again, we sit down on first-time home buyer. There's 4 loans. Are you a veteran? Nope. Are you buying out in the country? Nope. Do you make more than $120,000
Buying
a year?
out in the country makes a difference.
Well, yeah, USDA is 0 down.
I'm learning. I'm learning. Go ahead.
Great rate. Listen, anytime somebody qualifies for USDA, that is the best product out there in my opinion. Okay? I don't care if they want to do FHA. I don't care if they want to do conventional. If you can qualify for USDA, 0 down, PMI on a $200,000 house is $50 a month with 0 down. Give me a break.
Now, see, I got to go talk to my kids about this because I keep telling my kids, you go out in the country and buy some acreage, build you a home, and then I'm going to build me a small home, a cabin back in the back. Huh? So I can get them a better rate, get them out of the city and get them out there. All right.
It's income. You can't own any other houses. You can't make over $119,000 a year household income. It's a very, very good product.
Mm-hmm.
But again, if you don't know the option is there, if you think of a first-time home buyer loan right now, what loan do you think of? Honestly, just say it right now.
FHA?
FHA.
Yeah.
Everybody believes that.
Mm-hmm.
I'm not. No.
No.
Just no. And here's the conventional payment. Here's the FHA payment. Here's what you put down. Here's what you owe.
And did you call that
side by side?
Out in the country, a
USDA.
DA?
Or RD.
Okay.
Rural Development, yes.
Okay.
USDA product.
Well, that kind of would inspire somebody to maybe move outside the city.
That's the whole purpose.
Yeah.
That's the purpose.
That's the whole purpose.
I like it. I like the idea.
Then we go FHA. Yes, sir.
Let me ask you this. I've heard, because I watch CNBC quite a bit, and I saw them talking about this on the other day, and they were talking about mortgages. And have you heard anything about assumable loans? They're trying to bring them back. A lot of people years ago, they got these 2, 3, or 4% loans, and then they're going and selling their house, and then all of a sudden this fantastic 3% loan is disappeared. So they're trying to get that, the way I understand it, they're trying to get that loan to stay with the house and sell it with the house. And then you can get, if you're buying a $600,000 to $700,000 house, you're getting it at 3%. That's amazing if you take it over.
Or you take that same rate with you to another house is what they've talked about on that as well.
Yeah, now that would even be better.
Check this out. VA loans, assumable. So let's just say I'm a veteran, I'm selling my house. Do you have to be another veteran to assume my mortgage?
I don't think so.
You would think you would, though.
Yeah,
you would
most
think
people
so.
would.
But you don't.
I think you and I have discussed that in years past,
Yes,
and I kind of see. I do listen to you.
Yes, sir. So that's a really neat feature. But here's what happens on some. So you got that 3%, and you're selling the house.
Mm-hmm.
If you let them assume it without writing you a check for your equity, you just gave them a lot of equity. And so it's not as attractive as it can be in some situations because they don't have the 30, 40, 50, 60, 80, maybe even $10,000 for the equity.
Yeah, but couldn't you do some kind of a second on that for the equity?
Interesting.
I don't know.
Did you just push a nerve or what?
Well, you can't use unsecured funds
Right.
for down payments, right? And I don't know how you're going to get a second mortgage on a property you don't own yet.
Yeah. Well, I know
But
they
maybe-
were working on it to try to
are.
try to get the more of the assumables back because there's a lot of loans sitting out there at 3 and 4%.
And they're not, and then that's the reason why we're not seeing a lot of people move yet.
Mm-hmm. Yeah.
But they're watching their equity go up, and it's absolutely awesome to see that. And, one of the craziest things so far this year is to see the average loan size just of my little company. The average loan size going up like $350 is what I'm seeing. Average in Arkansas is around $220, $230 right now. But to see my average loan size go to $350, right? I love it when they go, well, I've never heard of you. I said, well, I haven't heard of you either. But, there's all kinds of mortgage people around here. And you just, go back to pre-approval for a second. You know how long that takes?
No.
Here's the link. Fill it out. Spend 5 minutes. Here's the link. Pay for credit report. 15 minutes later, you can be pre-approved.
Oh.
I got to make an offer on this house. Here you go. You're pre-approved. I sent you a pre-approval letter. Get the accepted offer. Come in. Then we'll sit down and talk it over. Right? Wow. A lot of times they'll call on that last minute.
Yeah.
And it's really that quick.
Yeah.
I don't care if I'm in the middle of the ocean on a cruise. I don't care if I'm in Israel on a tour. Right? It's all done right there on the phone. You can send them a link and they can take care of it. It's that awesome and that easy.
Okay.
So, again, everybody's surprised. They'll come in and sit down and they're like, how? And very few people will come in anymore. It's all done on the phone or text or even Zoom every once in a while now. Right? But again, it's so easy to get pre-approved and to get your questions. And when I tell everybody, I say, do me a favor, please, chat GPT later, look up the internet later, ask me, let me give you the facts. And then if you want to go back it up, go there. Because you can get out there and get down these rabbit holes, and 99% of that stuff out there is to get you to call somebody, right? And if you read something that was 2 years ago or 6 months ago, that's no longer the fact, then guess what? You got this little preconceived notion of what's going on, and that doesn't apply to you at all. And like, what do you mean I can't make that much more money? What do you mean I got to provide all of my assets for USDA? Because they want to make sure that you don't qualify for another loan. So that actually goes to help somebody to move out in the country.
Okay.
There's all kinds of little things out there.
Well, Shane, let me ask you this, because something stuck in my head going back to this PMI thing. If somebody has a mortgage and they don't know kind of where they're at in it, can they come to you and you kind of take a look at their mortgage or tell them these are the questions you need to go ask your lender, and then you could help them to either get that corrected or maybe even refinance for them? Is that a service that you offer?
I can show you. All I get them to do when they call and ask about that is I get them to send me a copy of their mortgage statement. They'll text me a picture of their mortgage statement.
Okay.
I'll look at what they owe. I'll go look at some valuation models out there and say, okay, here's what you do. You contact them, tell them you have 20% equity, right? And they'll tell you exactly what to do. And then I'll get a text message a couple weeks later, say, hey, man, they removed my PMI.
Oh, wow.
And they weren't even my client to begin with, right? Somebody just told me. I was like, no, let's not refinance this. Okay, you got a great rate. Let's stay there, but let's get rid of your PMI.
Do you mess around any with bridge loans?
Mm-mm.
You don't?
No, sir.
That's more bank.
That's a bank product. Listen,
products.
I leave the bank and let the bank do the products that they do.
Sure.
And I love that they do that service.
Yeah.
But sometimes
I know several people that I've worked with have done bridge loans.
Right.
And it's in case your house hasn't sold, you can get a bridge loan and carry it over until it does sell and then move on.
And that is a short term. I'll tell you something else that we just ran into. We've got a couple buying that I told you about earlier. Their house hasn't officially sold yet. They qualify for both mortgages easily, but they don't have the extra cash to put down from the purchase price down to the $832,750, which is your conventional loan, your conforming
jumbo,
loan, right? And I said, you got 10 IRAs there. You can. I'm not a financial advisor, nor do I play one on TV, but you can cash that thing out. And as long as you get it put back in 60 days.
There's no penalty.
There's no penalty.
Interesting.
I said, I'm not recommending that. I am providing options.
Yeah.
You're going to do that. I think when I read about that, you're going to do one a year. So you can't do that all the time. But again, there's options. And I go, make sure when you do that, tell them not to withhold 20%. If they do withhold 20% and send you that money, when you put it back in there, you've got to make up that 20%, or that money, that part's going to become taxable.
Yeah.
So again, there's so many different ways, and there's so many ways in the rules that we can actually use if somebody just knows about them. And sometimes I ask these underwriters, I'm not going to send you a question or question what you're asking me for if I don't know what I'm talking about with this on this. We're not going to sit there and argue. Yeah. And every once in a while I say, show me in the guidelines, and I'll leave you alone.
Okay. Hey, folks, we're coming up to about a 45-minute mark here, and hey, we're having so much fun. If you need to push pause, come back and finish this, because I've got a few more things that I got to ask Shane about. We're going to keep recording, and so all I can tell you is this is going to be a longer episode. But if you have a lot of questions about mortgages and things like this, then you just keep listening. Those of you that you say, well, I'm not interested, well, get off. You're okay. Come back and see us next episode. Maybe we'll scratch your itch with that one. But this is too good of information for us to just cut short, and I really don't want to do 2 programs. So we're going to go longer. And if you need to push pause, come back and tomorrow or at a later time and see this. So let me continue on with this. there's probably, and I'll show my ignorance about this, but that's okay. I've heard of 20, 30, 40-year time frames. What kind of a thing do you, rule of thumb, have as one of the smarter things to do?
Real easy. Dave Ramsey gave us to this. You ready? 15-year mortgage.
Okay.
Less than 25% of your take-home pay. Your mortgage payment.
Okay.
You can't lose.
All right.
I mean, that's ideal.
Say that one more time for our listeners.
15-year mortgage.
15-year mortgage.
Your mortgage payment less than 25% of your take-home pay.
Okay.
Now, if it's 25.6%, come on.
25.
Yeah.
Come on. Right. Yeah.
So it doesn't need to be over the 25%.
That's not a qualifying thing. That's just a best practices, if you will.
That's the recommendation.
Yeah, that would be great. How many 15-year mortgages do I do? 1 out of 40. 1 out of 40.
Okay.
Why? Because the houses are expensive and you put it down on a 15-year note. I actually wrote some numbers on this. I wanted you to see that real quick. On a $250,000 mortgage with 5% down, you figure 15-year would be 5.625. The principal and interest would be $19.56 a month. 20-year would be 6% at $17.02. So you're looking at $254 a month difference from 15 to 20. And then you go to 30-year at 6.375, $14.82. So you're looking at $470. If you pay $470 more a month, you can knock off 15 years of your mortgage. You're building equity faster.
Yeah.
If you do have PMI, you're going to get rid of the PMI faster.
Yep.
Right? And so it's an option.
What is the theory of, we used to say take a 30-year mortgage but pay an extra payment to principal and interest only once a year, and you'll drive it down to, 7.5 years or something like that. What's your thoughts about that? 5
to 7 years. My thoughts about that is this right here. A lot of people think that the biweekly payment does the same thing.
I've heard that.
Okay. So remember, interest on a mortgage is calculated once a month. When you do the biweekly, which is really good for budgeting, right? You would think that money is applied as soon as they get it, but they hold it until they have one extra payment. And when they have that one extra payment, they'll apply it then. So it may take 6, 8, 9 months before they have a full extra payment before they apply that to their mortgage. Okay? So there's your one extra payment, but a lot of people are thinking, hey, I'm paying this off earlier because I'm paying every 2 weeks. Well, I got an idea. Instead of doing that, just send $100 in each month. It's applied directly to principal right then.
Right.
And don't you have to, because I've heard somebody say, well, I was doing that, but they just made it an extra payment. They made their extra payment and they just paid it forward. You have to put on there, this is applied to principal only.
With the technology and everything, when you make that payment,
okay,
you there's a spot that says additional principal, and so you can actually allot it right there.
Okay,
and you can actually put it there.
Okay.
If you just mailed a check in for everything and didn't specify, then of course it's just going to go towards your next payment.
Okay.
And again, remember, credit cards, if you pay, 10 days into it, it's applied right then, right? But the mortgage only calculates that interest once a month. Once a month. So that's what I would do on that. Pay the $100, $200 extra a month because I'm going to get the benefit right then, not 9 months down the road.
Yeah. The thing is you just do it.
To do it, you have
to do it. Is to get in the practice or the process of doing it once a month.
And and Dave teaches get out of debt first and then pay your house off, right? Because check this out. If you don't do that and you pay all your extra money on the house and then you need some money, what do you have to do?
Take out a loan.
Take out a loan on your house.
Yes, sir.
That's what I had to do.
Yes, sir. So you got to refinance your house. And if we would have focused that money on paying off the debt and building the emergency fund, and then you don't have to go refinance your house or get off that 3% rate because you kind of dug yourself a hole. Listen, life happens. There's no judgment here. I told you, I've done all the crazy things.
Oh, yeah.
It's written in some books on the crazy stuff.
Oh, yeah.
That's a whole segment by itself if you ever want to hear how stupid I've been with money at times. But again, what would you do if you didn't know anybody any money changed my life?
Well, I've got to tell you, you could put my picture next to stupid in one of the chapters because I have certainly made my mistakes.
Oh, my goodness.
And I have had credit card debt 3 times in my life. And the third time, I finally was smart enough to learn my lesson. And I do not have a personal credit card. I will not have one. Mm-hmm. People beg me to take them. Oh, we'll give you 30% off your purchase today. Well, no, you won't. Mm. Well, you don't want 30% off? I said, no, I don't want that debt. Because my whole thing is I used to tell people, credit cards are the devil. Mm-hmm. Now I simply say, if you have a credit card in your wallet, you have the devil in your wallet.
Carry it around with you.
I'm sorry, but that's my personal belief. That's how I live. And people say, but you can't go on vacation and do things with just cash. You want to bet? Mm-hmm. I've been to New York and back. I do it all the time.
They're trying, aren't they, though?
Yeah, they are.
They're trying.
They
Cashless.
are.
Yep.
And you know, when you spend cash, they try different ways to rip you off. But folks, if you're not watching your credit card bills at restaurants and places like that, or even I went to buy air filters a couple of years ago. I used a company credit card. Okay, I do have one of those, a company credit card, and you know what? They hooked me 3% surcharge. Mm-hmm. And so I told them, I said, nah, I'm not doing that no more. Y'all screwed me, so I'm not coming back. And I walked out on them, and I won't do that. Okay? It's just one of my personal things.
I carry cash for the exact same reason. If I don't want to give them 3%, I don't care if it's 54 cents on there. I don't want to just give it to you. I give you the cash. Mm-hmm. You know, again, but people don't understand. No matter what, I bought a piece of jewelry for my wife one time, and I said, "Hey, do you have a cash price?" Mm-hmm. She goes, "Yes." She gave me a cash price. If I'd have had to, I'd have driven down to the bank and cashed a check and brought it back because it was a few $100s cheaper just for cash. Yeah. So I had enough on me that I was like, heck yeah. And if you don't ask that question, they don't do it. And, you know, it's interesting to watch. Do you know who don't ask for discounts and coupons? Broke people.
Broke people. Uh-huh.
Isn't that crazy?
Wow. Pride?
I don't know.
Or ignorance? I don't know.
But, I mean, I will wear them out until they give my wife that 10 or 15% off of whatever we're buying, wherever we're at. You know, do you have a sexy calf discount?
Yeah.
Or dimple discount? Uh-huh. You know, I'll turn them in circles until I want a discount if they're going to give it to them. You know what I'm saying? So, again, if you don't ask, though, you're not going to get anything.
That's exactly right. Hey, let me go to one other thing is, Are reverse mortgages still a thing?
Oh, my gosh, yes. Listen, y'all. Reverse Mortgages of Arkansas.
Okay.
I started doing them in 2007.
Okay.
Certified reverse mortgage professional, right? The only one here in the state of Arkansas. I think there's 170 of us up there across the country.
Okay.
It's through our national association. And the product is absolutely phenomenal. The only negative we've got on it right now is we can't give people as much money as we want because the rates impact how much we can give them.
Okay.
You're not selling your house to the lender, okay? When they pass away, the bank does not get the house, right? It's just a mortgage. Mm-hmm. So think about a reverse this way. We give you a credit card if it's paid for. It doesn't have to be paid for, but if it's paid for, we give you a credit card. You get to use it. You're not required to make monthly payments. And when you decide to move on from this earth, you owe whatever you borrowed plus the interest on that money. And so either the kids sell the house and pay that off and keep the equity, or if they don't want to deal with it, they can give it back to the bank. The bank never wants a house. They don't make money off a house. They make money off of they lend money and want their interest back.
Yeah.
That's all they want.
That's it.
They don't want your car. They don't want your house. They're not trying to kick you out. Reverse mortgages. Please, I'm just telling you, whoever's out there listening, so many retirees need help.
Yes.
They're doing without. I don't care if you come to me or not. I will take care of you. But get the facts before you listen to somebody that don't know what they're talking about. And that does include your attorney, your CPA, your broke brother-in-law, right? Right? Get the facts and see, because the letters I can show you of retirees writing me, or the tears at their table when they don't have to worry about making that mortgage payment anymore.
Yeah.
They're not in this position because they want to be. And it's not a loan of last resort. We're starting to see a lot of people plan. So think about this. You've got a line of credit where you can get your money if you need it. And then your retirement funds are dwindling.
Mm-hmm.
And let's say the market takes a little hit. When you pull that money out when it's low, it never gets a chance to go back up.
Yeah.
But what if we do have a 20% correction and you've got this line of credit sitting over that you can live off of while you have your assets hopefully come back up in value?
Mm-hmm.
So there's all kinds of ways. I've had parent or grandparents take the money out and set up college funds because they didn't trust their kids when they passed away with the money to set them up for the grandkids.
Okay.
One lady did it out of Jacksonville. She did her reverse mortgage and took her two sisters on a 30-day cruise, which is kind of fun. But she's like, when I die, they're both out of state. They're going to sell it.
Yeah.
So, and then the other really, really cool thing is you can do a reverse mortgage to buy a home. Yes. So think about this. If you have a $200,000 paid for house, and I tell you, I can lend you $90,000 if you own that house. I can give you a $90,000 line of credit. Right? If you own it, just like that. So now, flip it. You go to buy a house. If I can give you 90, how much do you have to bring? 110. And so now you have a house with no mortgage.
Okay.
What if they just sold a $300,000 house and they don't want to put it all in there because that's all they got? Well, here we go. You put down 160, we'll give you the other 140. You bought your house, you have no house payment, because what's the purpose of having a retirement and paying your house off? Have no house payment.
Well, and I think that a reverse mortgage, I said years ago, a reverse mortgage was one thing that the government actually kind of came up with and got it right. I don't trust my government at all, but that is the one thing I've seen them kind of orchestrate that has really helped. And it's there for the seniors that did not, could not, would not, whatever you want to label it, get enough in retirement to live comfortably. If a young man in his 20s that you gave a book to, if it drew dust for 5 years before he read it and got his life on the right path, us seniors, if you will, we've known for years and have been told our entire lives, save, save, save for retirement, invest for retirement, do this for retirement, and yet we've stumbled, we have fumbled the ball. And so a reverse mortgage, I think, is great for someone that needs to draw that. And a lot of people are afraid of it, but I personally think they're wonderful.
There's nothing to be afraid of. And you want to rant? Let's rant, okay? Why am I dealing with these retirees right now? Who do you think is wiping them out? Who do you think's taking their money? Come on. Who's taking their money?
I don't know.
They're adult children.
Oh, God, yes.
They're adult children. It is the most infuriating thing that I can see. I've got a gentleman right now here in West Little Rock, lent his son $30,000 off of a credit card. Right? That's the only thing he's got left is a credit card. And I'll pay you back, Dad. And I'm talking about a 55-year-old adult son.
Seen it.
Yeah.
Right?
Yeah.
Again, I'm not telling anybody what but this is where I'm seeing, because you have a mortgage when you're 80 years old because you borrowed money to help your kids.
Yeah.
That's it. Or you've helped them get out of jail. You've helped them do whatever. Okay? But if that's where they are, and a lot of them will say, well, I want to give my kids something. But at what expense? Are you going to be here another 15 years?
Yeah.
Right. And you're just going to do without? And if it's not a reverse mortgage, what else? I mean, do something. They don't want to sell the house, especially if they had a spouse die there. They want to stay there because that's where their memories are.
Yeah.
So again, there's options out there. Just see what works. And again, they're not going to tell you they're hurting. They're going to do without. This gentleman was that generation. When they get a bill in, they write a check for it. So he's getting hit 3 to $300 to $400 a month on overdraft from his overdraft protection. He goes, well, my bills are due. I got to pay them. I just have to suck it up on that. I'm like, no. So he calls the credit card company. The credit card company, he says, hey, I'm going to be late this month. He has 47 accounts that's never been late in his life on his credit report. Never. I did his mortgage in 2020 on the house he's got right now. He calls them, Barclays, and tells them that he's going to be late. You know, again, that people don't do that anymore.
No.
And so they sent him someplace. He's been paying them $500 to $1,000 a month on this card. 30-day late, 30-day late, 60-day late, 60-day late, 90-day late. He goes, I don't have any late payments on my credit report. I'm paying them. No, sir. Here it is. You got to be kidding me. And so he thought he did what was right. It's obliterated his credit, you know, and thank goodness he has a certain financial product that you can't touch that's got money coming in every month for the rest of his life. Mm-hmm. And of course, the siblings don't talk because one has drained the other. So again, I can rant on that all day long. I love that product. I walked out of a house, last story, in Hot Springs Village when the lady had a $75,000 line of credit and her son that makes $146,000 a year can't live off of that, but mama's living off of $30,000 a year and can't afford the mortgage payment anymore because she took that home equity line of credit and gave it to him. And I said, ma'am, if you're going to take more money out of your house, I don't want to do this mortgage.
No.
She never called me back.
Yeah.
So, but again,
well, Shane, that took a lot of guts on your part and a lot of integrity and character to do that. And I know that oftentimes these things, I know, and we're getting ready to land this plane and close this episode out. But I remember years ago when I was in another field that I'm no longer in, I sat with some parents that they had 3 children. 2 of them were wonderful. They made a lot of money. They know how to manage the money. They took care of themselves, never asked mom and dad for a dime. They had another a sibling. He was a son. He was a slug. Sucked everything out of them possible. And I sat across the table from them and talked to them. They refused. Mama refused. Daddy was ready, okay? Daddy was ready. Let's fire up the revocable living trust. Let's disinherit this kid. We've given him everything. I looked at him and I said, haven't you already given him more than his fair share of inheritance? And so anyway, folks, I hope that you've enjoyed this episode. I think that we've had a lot of wisdom, a lot of knowledge. I think Shane's a great guy. You can reach him at wonderstatemortgage.com, wonderstatemortgage.com. If you're not in Arkansas, if you're in a surrounding state, he's got friends, he's got buddies, he's got people like him that he associates with that could help you. I know I've got listeners in the state of Texas. I know I've got listeners in Kansas, Missouri, Oklahoma. I know where some of you are from, and because I get emails from you. If you're needing help with something like this, reach out. If you can't get to Shane at wonderstatemortgage.com, send me an email. I'll get with Shane and say, hey, here's somebody that you can contact. Have one of your buddies contact them. And so please take this advice, take this wisdom, take this knowledge to heart, and do something to better your life. And so I hope that Shane, it's been a privilege to have you. I do have a gift for you. I want to give you one of our Larry's Rants, Raves, and Reviews T-shirts. Wear that proudly for us. And we're gonna probably have you come back at another time and do another episode with us. But folks, please take a good listen to this, take it to heart, and let's see if we can help you out. Contact Shane and see if he can help you. I hope that you will have a wonderful day.